Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market update for Monday, the 11th of June. Well, there appears to be no magic bullet for Spain. The pain in Spain continues and is far from over, in our opinion. The infusion of $125 billion into the banking system was nothing more than a band-aid on a festering problem that the banks have with their real estate portfolios. What this tells me is that things are far from being right and everyone is still kicking the can down the road. I think the key today is going to be how the markets close. If you look at what's happening, you're seeing a move out of financials. In fact, the financial sector is down 0.44% and into utilities, which is up 0.26%. We're going to be looking at the two biggest stocks on the move there, Bank of America and PGN in the utility sector. So let's get started right away. So here we are. We're looking at the market, and we're going to be looking at the S&P 500. And just click here, and we get to bring our chart up, and you'll see what we're looking at. It's a one-year chart, and you can see the market is actually come under pressure. It started off, actually, the move started off at really kind of like midnight when the news came out, but you can see this market's on the defensive. The low today so far is 1320.20 in the S&P 500. I think if we start making new lows a little later on in the day, this actually could turn out to be a really big down day. So here we are. We have our monthly is negative, our weekly and daily are positive. So we've got a trading range. So you can see this market if you just, let's just do some simple drawing on the screen here. You can see basically we've just sort of got this resistance area right around here somewhere, and we've got this support area right around the 1270 area. So I think we're up against the top of the line. You've got this area that has presented problems for this market before, so I would not be surprised to see this market come back down, particularly if we make a new low today below the I think it's 1320 we said. So let's watch that very, very carefully and go to our next chart. And what's going on? I mean, this is the psychology of the markets really plays a huge part in how markets move. And if it's perceived that the problems in Europe, in particular Spain, are not solved, and they are not easily solved just by a cash infusion to the banks, it's going to be perceived that there's still problems out there. And I think that's what's going to happen. And I think we'll see this market on the defensive later today and for most of this week. But we will need to see this level here, certainly the 1307 level, the 1300 level is going to be a big psychological level. If you go through there, then I think we'll see further downside pressure. So let's go back to our portfolio. Easy to do. And let's take a look at silver. The NASDAQ is pretty much, the NASDAQ and the Dow are pretty much the same pattern. You can see they started out high and they've come down, making new lows. In fact, the NASDAQ is pretty much close to the lows. It's 2,849. The low is 2,844. So just a few points away from its low for the day. And the other thing to look at on the NASDAQ and some of the other indices is the divergence. See how we're making new highs here? And the divergences are going this way. Particularly if we go below this low here, then this is a confirmed divergence, and we should see the market go down to the 2,750 level. So let's just clear that screen off and go to our next market. And the next market we're going to be looking at, let's go back here, is silver. Silver and gold really haven't done anything, which is really a surprise to a lot of investors. But you basically have this sort of trading range, this 55 trading range, which we've talk about. You can see we've got the monthly is down here, the weekly is up, and the daily is down. So it gives you this 55, which is, as you know, if you've seen these broadcasts before, that's a trading range. And I think that's what we have right now. You're sort of locked in on the top end here, and you're sort of locked in on the bottom end right here. So certainly between the 28 and 29 level right now, it's very tight. But I think if we could see a move down, I wouldn't be surprised to see down move to the 2750 area. And we're getting to an oversold condition here. So we may have an opportunity just on a trading range. You want to use the Williams percent R indicator as a way to get in the market for a trading turn. So let's clear the screen, go to our next market. The next market we're looking at is going to be gold. And gold really hasn't done much of anything given the incredible situation that's building, continues to build in Europe. Plus 55, we know that's a trading range. And again, we have the same pattern. We have the monthly right here is negative. The weekly right here is positive, and the daily right now just turned down, and that's negative, giving you the plus 55. And you can see this sort of no real changes. The only thing you can see on a very short-term basis, and this is a short-term, is you went higher, higher, higher. And this is a very important low. The 1560 area will be a very important low. If we close below that, I don't think that's going to happen today, but that's certainly an area which would change or disrupt this particular pattern. I think what we're going to probably do is see more sideways action, more trading range in gold in the immediate future. So let's just clear the screen off again. Let's go and look at the next market. The next market we're looking at is copper. Copper is really not acting that well. As you can see the reflection here, the last 3 days, it's sort of 4 days rather. It started high, came back down, started high, came back down, started high, came back down. Today's no different. Started high, came back down. And this is just, again, this is not a particularly bullish formation, in my opinion, is that all of our indicators, monthly, weekly, and daily trade triangles are all negative, indicating a lower price. So let's go to our next market. In the next market we're going to be looking at. Now you can do with MarketClub, you can do that both ways. You can go either the triangles here, the little arrows, I should say, not triangles, but the little arrows are going to go back and forward, or you can go back straight to the portfolio itself and just choose the next one there. So we're going to be looking at crude oil, which we actually have, and the crude oil right here, minus 100. So we automatically know it's a negative signal. And again, this market was trading at sometime today 86.64 on the upside, came under pressure. It's down almost it's over 3 cents from the highs, and the low has been 83.11, and we're 83.51. So the market isn't exactly acting in a super fashion. And I think if you look at this pattern that we're seeing in this market, you can see it's sort of a little bit here, and we're doing something very similar here. And I think if we go through, I would say, the 82 level and close below 82, then I think we're going to test the $80 a barrel level in this market. So let's see how that plays out. But generally speaking, this is not a bullish formation, in my opinion. And certainly, if we clear the screen off, and I want to just show you this one thing I'm looking at also, and that is we put a close-only chart on. Now, you have 3 options with charting with Western charts. Close on Western charts. I'll just show you. It's Western charts. Some people like to look at them. I think the candlestick charts are more powerful, in my opinion, visually. And then you have a close-only chart. Now, the close-only chart, you can see if we close down here, the only lower close we've seen in this market is approximately the 82.38 level. So this is not going to be a good close. If we close at current levels, it would indicate we're going to test that lower level. So let's go to our next market, and that's going to be, if I'm looking at this correctly, it's going to be the euro, and the euro really did not act well at all. Look at this market today. Started out, we closed, obviously this is like Friday, this is actually Sunday. The news came out, boom, everything, wow, happy days are here again in Europe, particularly with the Spain problem potentially taken care of, not. And then you have today's action negative. We're closing below the lows we're probably going to close below the lows seen on Sunday, which means this market's really not doing very, very well. And this pattern, again, is not what I consider to be a bullish pattern. It's like when you go up like this, it's a flag formation, a pennant, whatever you want to call them, a flag, I call them flags. Pennant would be more like you're doing this type of formation. A flag is like this. And so I think this is a flag formation. I think we're going to see a move below here. And if that's the case, then we're looking at the 120 area as the next major logical stop. And again, this is not looking too well. I can't imagine it's one of those trades you can see we've gone down from, up here. You can see the numbers 139.69 on the monthly trade triangles, 129.95 on the weeklies. And it just hasn't stopped. It just really is. And this is the great thing about currency trading, is once these established trends take place, they tend to persist longer than most people expect them to last. So let's clear the screen. Let's look at a couple of markets. Actually, we want to go to a CRB index because that's an important one for inflation, which is going to be a very big point. But let's go to our next market, and that's the CRB Jeffries Index. And I think this is a negative engulfing line we're seeing right now, and it's an overhang, dark cloud cover. And if we see this market close below the lows seen this day, 270, which we outlined in today's comments, that's a very, very big number to go through. And if that's the case, then we're going to test this level and then down to our 250 target zone on there. So again, you've got a minus 100, you've got a monthly and weekly negative. Only the daily is short-term up, but it's still a minus 100. So let's go to our next market. And the next market we're looking at is the Bank of America. Now this is an interesting one. You've got the weekly and the daily positive. The monthly, however, is the long-term trend that we always look at. And the monthly went negative right here on May 16th at 721. The market's at 741. You can actually get into this trade if you're a longer-term type trader right now and save some money. You actually pick up 20 points. But the action here is not good in my opinion. You can see how we acted on Friday, and here we are. We're going to be under pressure. It looks like we're going to close lower. And certainly the low we saw on this market, the open at 735, I would say a close under 735 would not be good for this stock. And today's low is 734. So you can see if we make new lows, it's going to be under pressure. So I think the Bank of America, which is the #1 losing stock in the financial sector today, so pay close attention to that, because if it starts getting hit later in the day, you probably want to go short. So let's take a look at our next market. The next market we're going to look at is actually something from the energy sector. And again, this is a classic example. The biggest winner was the utility. Everybody's moving into utilities because they're safer and for the premium plays, and also the dividend plays. But this stock is up 3.52%. It's a classic example. We've talked about this before. And let's scope this out just a little bit further. And remember we talked about a 52-week highs? Well, here we are. This was a 52-week high on a Friday. And you can see the market's up 3.5% today. So again, it's all about looking at these markets on a Friday. Friday is probably the most important day of the week, simply because it tells you what people are willing to take home with them for the weekend and what they feel comfortable taking home. So that's a very, very big one. Obviously, you can see this market moved up quite a bit. So let's just clear the screen and let's go to our next market. I think that maybe that's it. No, actually, the ultra short euro, the EUO, there's a way to actually trade the euro on a short on this ETF. And then finally, we're going to take a look at Apple because of the big conference today. But here's the EUO. It looks as though the trend is up. And the way this market's acting, excuse me, today, it looks as though it wants to go higher. You've got the monthly and the weekly positive, 85, plus 85 score, meaning the trend is higher. I think the 21 level is probably the key risk factor, about 46 points right now, but it looks to me like it wants to go higher. So let's take a look at the marvelous Apple stock. And this was sort of took place. I'm going to scope this into 6 months, but you can see this is a sort of like a base this market's been building here for the last few weeks. We did break out a little bit today, sort of a new high move, but the reality is this: you've got the Worldwide Developers Conference in San Francisco today and all this week, and that's going to be some of the latest whiz things out of Apple. But you can see quite clearly from 355 on the monthly, we've never deviated from that level. 576 on the weekly is the last weekly, and the daily we don't pay much attention to on Apple, but it's a plus 100, so it's a strong trend, and that's all you need to know about Apple. Looks like it wants to go higher. But hey, this is Adam Hewison for Market Club. If you're interested in something we're doing here, which I think you really could be, you may want to take a look at our one-on-one Market Club coaching, because it's really a very, very helpful thing to have. It's personal, it's one-on-one, and the call is free, 877-219-1482, and also the consultation is free. So just give us a call, and we have one of our consultants help you and find out if one-on-one Market Club coaching is right for you. It can make a world of difference, trust me on this one. So this is Adam Hewison for Market Club. I'll be back tomorrow, same time, same place. Have a great trading day, and let's see where that markets closes today. Watch the financial sector and watch how the S&P 500 closes. Very, very important.